As of yesterday, he put an update on his yearly earnings, so we're actually going to do another video on this about his dividend income for this past year.
So today I want to show you all the dividend income I've made from investing in all of 2023. If you're not sure what dividend stocks are, I'm going to explain it using Pokemon cards and magic tricks. It's going to get crazy. So I have here a couple Fire Energy cards, which we'll use to represent $1. So I have here $1, $2, $3, $4, and over time, we can take one of them and turn it into something a little bit more valuable, like this Charizard card here. That is a first edition Shadowless, which we'll call compound interest. Now, when I combine compound interest with all these dollars, over time, we can get it to seem like there's even more Charizards. Because compound interest plus dollars over time equals more Charizards. Now, I know what you're thinking. Andrei, you're just showing me the same Charizards, but check this out. I have here several of them. And for the last one, dividend stocks sometimes pay us yearly, sometimes monthly, but most will pay us quarterly, which looks just like that. And before you know it, you have a dividend portfolio that you can use to buy valuable Pokemon cards with and then go broke.
Yeah, you guys won't be getting these fancy magic tricks with me, but hopefully sound and financial advice, sure. Fancy card tricks, nope.
Just kidding. Let me show you the breakdown of the portfolio and let's get into it. Hi, my name is Andrei. Hope you're doing well. Come for the finance and stay for the magic 2024 style. Sometimes I wonder just how confusing it is for someone who watches me for the first time. This guy does magic. Now he likes Pokemon cards. And I'm like, let's talk about macroeconomics, investing, spending habits, dividend investing. What? Anyway, when it comes to investing, there's a lot of different ways to do it. Some people love tech stocks. They like things like Apple or Tesla. Other people like to buy bundles of stocks via ETFs that track specific markets. The nerds among us in the finance community love to debate with each other about which one is the best. But the truth is, any one of them could be the best, and one of my favorite ways to do this is through dividend investing.
A lot will depend on what your financial goals are and what you're trying to aim for as to whether or not you want to go for dividend stocks or whether or not you want to go for growth stocks. A lot depends on, again, what are your long-term goals or what are your short-term goals. Are you trying to get income from this in the present, or are you trying to save up for your retirement? A lot depends on your approach needs to change based on what your goals are.
And why this is can sort of be summarized by data that was released from Fidelity. Dividends have accounted for roughly 40% of the market's returns since the 1930s. And
that is wild.
During times of high inflation, like the 40s, 70s, and 80s, when inflation was more than 5%, dividends made 54% of that total return. Dividends also make it
yeah, this is crazy.
Super easy to plan for the future.
Now, I wonder what the updated information would be for what's been the last 20 years, since it seems to have transitioned a little bit away from that, and growth stocks have gone nuts over the last 20 years.
Because you can compare how much money you're making in passive income from dividends against what you're spending, and the way it works is the same regardless of how much you make per year.
One thing he hasn't noted yet, and I'm not sure if he's going to in this video, I know he did it in the last one, what you're taxed on for dividend income is also more beneficial as well if it's a dividend qualifying stock for it. Usually your taxes it's in a lesser bracket, tens of thousands of dollars. So that's something I hope he notes pretty soon.
Whether you make $50K or $1 million per year, the formula is the same. And what it is 25 multiplied by your annual spending. So if it costs you $40,000 a year to be you, multiplied by 25 is $1 million. You need $1 million invested at 4% to pay you that same $40,000 per year. I think when most people hear that number, they're like, $1 million just to make $40,000 per year? That's ridiculous. I'm not even gonna try that. But you'll be shocked just how fast you can put yourself on that path, because you can do it in just 8 short years. And the way to do it is if you
it doesn't look like he's going to go into the tax implications there, but
$100 per month, $6,000 a year for 8 years into the S&P 500, assuming 8% returns, and then you stop, you'll become a millionaire automatically. Now, yes, it's gonna take 40 years for your money to compound just to get to that point, but still, it's crazy to think that you can do this in just 8 short years. Yeah, I can already read the comment section, like, but Andrei, $1 million in 40 years is gonna be worth like 5 thanks to inflation. That's what I imagine they sound like, just basically the Grinch, but personally I would rather take $1 million in 40 years than $0.
Yep.
Maybe that's just me. So with that said, here's my dividend portfolio. So I started this thing in 2014, back when I had no idea what I was doing.
Remember our last video that we did, this was like 193 grand that he had on this. Dude is killing it.
But after many, many years of experience, blood, sweat, and tears, and Pokemon cards, I have to admit, I still have no idea what I'm doing, but it seems to be working. Because throughout the years, the income has grown from $2,600 in 2015, $3,900 in 2016, $5,400 in 2017, $5,900 in 2018, $6,700 in 2019, $7,600 by 2020, almost $10,000 by 2021, $13,500 by 2022, and in 2023, almost $17,500. In December alone, the Robinhood account shows that 1 month made me a whopping $3,278. By the way, if you also want to track your progress with your dividend stocks, you can find that spreadsheet linked down below in my Patreon, where you'll also find my stock courses. Just kidding. I'm not selling any yet. Now, one of my favorite things, though, about dividend investing is the dividend increases. If a company does well, it tends to increase its dividends per share. This is not guaranteed to happen. It doesn't always happen. But for me, it happens almost every single month just because of how many stocks I own. But because most of my stock positions are not that big, maybe in the couple $1,000 range, the increases tend to be small, anywhere between just 1 penny all the way to over $100. But in December 2023 alone, my total dividend increases was $190.48. Now, $190 does not seem like a lot of money, but that is an insane amount of money when looking at it from the proper context of the 4% rule. Why 4%? Because that is the 4% rule of retirement.
Recommend doing this to be conservative, making sure that whatever nest egg you do build up does remain and keep good. The last thing you want is to retire, not have enough money, and you end up using, the money guys would say is the army of dollar bills, and you're using it on up. End up taking that whole 10% out every year, you're a lot more likelihood to deplete all your funds. The 4% rule helps, I think it was over 80-90% probability that you will continue on with those funds pretty much for the rest of your life and you'll be fine. But any more than that, you had to run at a greater risk to depleting all your funds.
Financial planners assume that is the safe withdrawal rate. When you retire, you'll be selling the portfolio at 4%. So the other way to think about this is, how much money do you need to invest right now at 4% to make you $190.48 per year? The way to figure that out is to take that number, 190.48, divided by 0.04, 4%, and you get $4,762. That is how much money you need to invest at 4% to make you $190 per year. Except that is $4,762 I didn't have to invest at all. It was just automatically created for me via the dividend snowball effect, which is kind of insane. Now, I do have to admit though, not every month is going to be that crazy. December is always the best month, but still, that's pretty cool. Now, if you're curious,
Always the best month for dividends.
is to see what the makeup of my portfolio is, like for example, the beta number, that number is 1. Beta just measures how correlated something is to the S&P 500, and 1 is good. It just means my portfolio is going to move in line with the S&P 500. Less than 1 is even better technically, because if the market falls, my portfolio would fall by a lesser amount. Now, a beta score of more than 1 isn't necessarily bad, it just informs me psychologically. For example, if I'm taking on more risk and my portfolio is moving in higher amounts up and down, because I'm taking on more risk, I should probably also make more money. And if I'm not beating the market and I'm taking more risk, probably not worth my time. So it's not a super important number, but that's how it's used. Now moving on to my dividend yield or interest rate, that shows it's about 2.1%. Now
Which overall for a dividend high portfolio, that's really not all that high for dividends. But he may have bought these stocks at a lot lower position, meaning where that value of that stock was a lot less and it's appreciated up quite a bit. So its yield's gone down. But for him, based on his initial buying price, it might be a higher yield to him at his buying price. But we'll see, because when I made a dividend high portfolio, it was typically more, at least 4+% average dividend yield. So it'll be interesting to see what he says here.
This again is where the math wizards are going to crawl out and be like, 2.1%? You're only making $20,000 a year off a portfolio worth almost $1 million? That's so low, bro. But what those math wizards don't know, and what they're not taking into account, is the fact that almost half of my portfolio's entire value is not even dividend related. Like, for example, VTI, which is the entire stock market, which I have a pretty substantial position in. And that's only paying a very sad and lowly 1.47%. And because of that, it's dragging my average down quite a bit. Even though it did pay me over $1,700 in December alone, the point is, it's not really considered a dividend ETF kind of a strategy. I also have a ton of other individual stocks that are not dividend paying, and again, that's dragging the average down. If I took all that stuff out, it would be between 3.5% to 4.5%, or over 5% yield on cost. But
okay, which is one of the options I gave, so.
That's not important. But the real number that gets me super excited is the future projection of what the portfolio holds, assuming that I continue reinvesting all of my dividends via DRIP and I continue contributing at the same pace. The income should grow to roughly $46,000 per year in 10 years from now, and in 20 years, it could grow to almost $100,000.
That is solid. Super solid.
A year. But Andrei, 100K in 20... Anyway, 10 to 20 years, yes, is a long time from now, but it's also time that's going to happen to me anyway.
And it's still 100K, and it's 100K better than what he was in the position with before.
And the fact that I set myself up for this path to have 100K in passive income is actually super cool to me. Now, the most important takeaway
Yep, that is super cool, Andrei. Good job.
Here is that hopefully you can see that everything that happened for me isn't because I'm some genius investor. Look at me. It's not because I do qualitative and quantitative analysis. It's just because I took something, I stuck with it consistently over a long period of time. In fact, I don't even think it's...
Consistency over time is probably one of the biggest factors here for success when it comes to the financial realm.
Possible to outperform the market consistently. If someone is outperforming the stock market, it's not because they figured out some secret to the universe. It's because statistically, mathematically, someone has to be right at some point, and they're going to look like the genius of our time for that brief period of time. But statistics also show that it's almost never...
Those points there are huge, that again, over the time or over any decent period of time, you will not outperform the market itself. So might as well just follow an index fund rather than trying to beat the market.
Never that one person over and over again. Now, maybe I'm just skeptical and there is someone out there who can outperform the market consistently, and if there is, let me know. I'd love to learn your secrets. But why I think all of this is because maybe it was possible to outperform the market back when Warren Buffett was getting all his numbers through some old newspaper. But nowadays, the market is a much more complicated place. We have derivatives, futures markets, options trading, cross-collateralization, accounting tricks, dark pools, all sorts of magic tricks I don't even understand. So instead of focusing on one portion of the market by picking a single stock, instead, I'm going to pick the entire market and watch it grow. With dividends, the idea is...
And it takes a lot of the stress away as to, oh my goodness, there's something happening with this particular company that I may not be aware about. And then you have a 30% drop and you're like, what the hell? Why did I lose all this money? Or if it's mostly all into an index fund, you don't have to worry about that. So that's another thing I did change up with this past year with my own portfolio, and the portfolio that I have a lot of people follow is that we went a lot more index fund heavy than we were previously.
That I never have to sell the tree or chop it down. Instead, I'm just going to live off the fruits that it produces, and instead of reinvesting those fruits back in like I'm doing right now, instead I'm just going to use this income to pay my bills. It's really simple. And if it all works out the way it should, hopefully this tree will grow faster than I'm able to spend from it. And when I'm old and ready to pass down my generational wealth to my family, I'll have to live with the fact that there's a 70% chance that they'll squander all of it. Because statistically, that's what ends up happening. And if my kids somehow manage to keep it, there's a...
Poof. Hopefully make it into a solid trust with lots of rules. Even then, who knows?
90% chance their kids won't. Statistics. I don't know why that's funny. It's actually kind of sad. But the takeaway is that if you're watching this video and you're looking at the portfolio and you're like, this is never going to be achievable for me, just remember, it didn't start here for me either. I started with zero. Saved up to $30,000 in 2014. I started with a little bit at a time, making $50,000 a year and saving 50% of my income before taxes. After compound interest and another 4 years, it automatically grew into $200,000, which is where I roughly was in 2019. Since then, I had a huge amount of luck on my side. The stock market went up over 10% per year. My YouTube...
There's a saying about the whole thing with luck, but he had to be prepared and he had to be in a position where he could be this successful. So I know he belittles himself a little here for that, but dude put himself in the right position to be able to make these moves. So again, don't feel ashamed or bad for yourself at all there anyway. And any haters to him, just go stick it up your own butt.
Channel blew up. There was more money that I invested. And overall, money plus time equals smashing the like button for more future videos and bad magic tricks.
Hell yeah, it does. Anyway, excellent job, Andrei. You're killing it. Wish you the best of luck. Think you'll even beat your projections because you, based on your numbers and what you've done even just over this past couple of years, you have astoundingly continued to beat the projections. So good job there, buddy. Keep up the good work. Keep on making those excellent videos. Until next time, guys. Ciao. Please don't forget to like, share, and subscribe if you like my commentary.